Today, Bitcoin and Ether fall to start the week, and Pantera Capital's Cosmo Jiang discusses a new Solana-focused treasury company. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Major cryptocurrencies in the red to kick off the week, even after President Trump said that trade negotiations between the US and China are going well. Investors are also bracing for a key Fed meeting this week. As of noon Eastern, Bitcoin dipped slightly to the $114,000 level. Ether fell nearly 2%, and Solana's Sol token dropped nearly 4.5% to $233. Now, the moves lower contradict what we're seeing in equities. Those are in the green as of noon Eastern. The latest economic data shows a weakening labor market and tame inflation, spurring hopes that the Fed will cut rates when it wraps its meeting on Wednesday. Now, taking a look at PayPal. As of 12:15 Eastern, shares were little changed after the company announced that it would be integrating crypto into its peer-to-peer payments. The company says users would be able to send crypto to others using PayPal, Venmo, and other digital wallets. All right, let's jump right into our main story. Helius Medical Technologies announced today that it's raising more than $500 million to launch a Solana-focused treasury company. Now, according to the news release, the vehicle has the potential to deliver more than $1.25 billion via stock warrants and will hold SOL as its reserve asset. The new treasury expects to generate revenue through staking, lending, and other opportunities. As of around noon Eastern, Helius Medical Technologies soared more than 150%. Now, that financing round was led by Pantera Capital, Summer Capital, and more. I spoke with Pantera General Partner Cosmo Jiang this afternoon about the new Solana-focused treasury company and broader crypto VC trends. So, Pantera announcing a $1.25 billion Solana treasury today through a partnership with Helius Medical Technologies and Summer Capital. It's part of this growing trend of digital asset treasury companies going public. First, it was Bitcoin, then Ether, and now it's Solana. So talk to me about why Pantera chose Solana for this new DAT.
Yeah, thanks so much for having me. I think to rewind a little bit, we've been very fortunate, humbled even, to really have been there since the very beginning of this whole DAT trend. We actually anchored and invested in the first DATs that launched in the US, outside of MicroStrategy, of course. The first one that we invested in actually was a Solana DAT. Its name is DeFi Dev Corp, or DFDV, which we're very excited about. And because Solana's always been a very big deal for us as a firm. It's our largest actively managed position, and it's something that we think is very game-changing technology. And because we started early in the space, we've actually been the most active in really guiding how the whole space has evolved over time. We were the first investors, and we couldn't be the most active investors in the DAT space. The most successful DATs, such as Bitmine from Bitmine with Tom Lee was one of the investments that we helped anchor and bring to life. And so we realized that we've just built all this incredible expertise and knowledge over time, and we care so much about Solana that, wow, it really makes sense for us to just go for it and try to do something on behalf of Solana. So that's why we're doing that.
And in the press release, you mentioned that this investment was oversubscribed, showing the strong demand for this new offering and for DATs overall. What are you hearing from partners who were a part of this deal? Why are they getting involved?
Yeah, I think people really realize that DATs are potentially a form of better exposure than buying the underlying, right? By owning a DAT, you really get the benefit of Pantera as an asset manager growing your productive treasury in a productive way and generating yield, up to 7% yield. And in addition, through financial engineering, capital markets activity, we can actually go out and buy more Solana over time. And so by investing in our DAT, it is possible to own more Solana per share over time than just owning Solana itself. And so we're seeing a lot of excitement from the market at what we can really achieve with Helius HSDT.
So you're entering a crowded field right now. We hear about new DATs popping up all over the place. Why did you feel like it was the right time to get involved, and how do you set yourself apart?
Yeah, definitely. I think this is where really our experience and starting this space and being really critical to how the space has evolved over time has given us a really great vantage point, right? When you really start from the beginning, back when we did the first deal for US DAT, it was in DFDV, I thought it'd be one and done. I thought this was a highly non-consensus thing. No other venture investor was taking this seriously. No other crypto investor was taking this seriously. But we really saw and underwrote why this could make sense. And so that's why we did DFDV. Very soon thereafter, Cantor, Tether, SoftBank actually approached us saying, wow, we really like what you did there. We've been ideating for a Bitcoin one for some time. Can you help us? And we helped anchor that investment and made a very large investment to bring that to life. And then obviously Tom Lee and Bitmine came along. We were like, wow, yeah, it makes sense to start an ETH one as well. And then looking back, there's just been this white space for Solana that hasn't happened. And so we feel that over time, there's probably going to be 2 or 3 large DATs for every major token. So 2 or 3 large ones for Bitcoin, ETH, and Solana. I think the Bitcoin and ETH story has largely been told, but the Solana story hasn't yet. So we actually think the Solana white space is wide open for us to really tackle. And we're excited to do it with great velocity with Helius.
Now, turning to the venture capital space overall, Pantera has been a major player in crypto investments. Are DATs the thing getting the most attention, or what other areas of crypto are getting funding right now?
Yeah, well, when we think about what really excites us, it goes across the gamut. But markets come in waves, and certainly DATs have been the beneficiary of the most investment this year. There's been over $20 billion of capital raised for DATs this year, which is a pretty shocking amount. Now, only some portion of that's coming from crypto funds. A lot of it is coming from traditional finance funds, which is great to see happen, right? Because that means adoption is really broadening out. Elsewhere in our portfolio, we're also spending a lot of time in the convergence of traditional finance rails and crypto rails through payments, through exchanges, and other services that really bridge the gap. And everyone's seen a lot of excitement with stablecoins and tokenization, and so that is certainly one of those areas that's helped by this bridging of TradFi and DeFi that we're really working on.
So obviously the regulatory environment has changed and made it more enticing to get involved in these projects. But what I'm curious about is how institutional interest has changed what you invest in. Now, obviously there is a strong appetite for crypto IPOs from places like Circle and Gemini, which we saw launch last week. But how is that appetite shaping the companies that you take on?
Yeah, the way that I think about it is our job as early stage investors is to find the bleeding edge of where we think capital will eventually go, right? And so when we think about that, we do have to take the mindset of, well, what are all our institutional LPs talking about? I spend most of my time speaking to endowments, pension funds, large allocators, and they really care about, where are the real use cases, where's the cash flow, where's the productivity, and so that's where we focus on finding pockets where we think real applications with real business models can get built, and we'll invest there in anticipation that institutions will then follow us. And so, one great example is Circle, something that we invested in 2013 before anyone really realized stablecoins were going to be a large thing. This year, it's been DATs. We really formed the DAT theme before any other large institution started jumping in, but now we've seen them all come in much larger numbers. And so I think as we look forward, clearly crypto in general is going to get a lot more institutional flows. I think one of the biggest catalysts for that has been Coinbase being added to the S&P 500. All of a sudden, every capital allocator in the world has crypto required to be in their benchmark now. And so everyone is thinking, do I want to be overweight, underweight, equal weight? And clearly people are choosing to be overweight.
Now, CNBC was just at Future Proof in California, and a lot of advisors there were asking about the future of tokenization and what that meant for them. How are you thinking about tokenization and how that fits into the projects that you back?
Absolutely. Well, Figure Markets is a platform that tokenizes home equity lines of credit that just went public last week, which we're really excited about. Right? The whole idea of blockchain is that it is faster, cheaper, better rails than our existing financial system. And so it just makes sense to us that more and more assets will go from our legacy financial rails into the tokenized world. Now, that'll happen in short bursts and over time and not all at once, but we are very excited to see that happen. And so we're investing pretty aggressively into things that will enable tokenized products to come to life, whether that's our investment in Figure Markets or Ondo, amongst other things in our portfolio.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.